Pirojsha Godrej joins us, Executive Chairman with Godrej Properties. Pirojsha, so nice to have you back on ET Now. Thank you for joining us. Now let's first talk about sales. Sales bookings have doubled, that an all-time high, driven by project in Noida. With this, you've achieved nearly 50% of your total sale booking guidance of 14,000 crore. Do you think that you need to revisit it because first 6 months have been almost gangbusters for you?
Well, it's a nice problem to have. I think we're very happy with the bookings delivered in the first half, particularly in the second quarter. We do think there's an opportunity to go past our guided number of 14,000 crore for the full year. But I think a lot of it will depend on how many project launches we're able to execute in these next 5 months. But overall, I think where we stand today, we're extremely confident of delivering the full year guidance and quite hopeful of going past it.
Pirojsha, the revenues have seen a substantial rise this time around. How many projects have been captured this time around and how many were hit in the recognition stage? Also, given that your accounting fundamentals, the current sale would be recognized with a lag, how do you expect this quarterly revenue run rate to pick up going forward?
Yeah, we have a large number of project deliveries currently slated for the fourth quarter. So we do expect revenue recognition and earnings in that quarter to be disproportionately higher than the other quarters of the financial year. But overall, there's typically about a 3-year lag between what we sell and what we deliver. This year, we expect to deliver over 12 million square feet of real estate during the year. We've delivered about half of that in the first half, but some of the more high-end projects and more lucrative projects for the company are slated for delivery in the fourth quarter. Overall, I think the kind of momentum we're seeing in the business, where we've been adding from a business development projects, perspective projects that are more centrally located at higher price points, therefore with higher margin profile. Also, the structure that we've been acquiring that projects where we've been doing more outright purchases, we think will lead to a very significant ramp up in revenue recognition and margin profile of the company in the years ahead.
Hi Pirojsha, this is Anisha also joining in the conversation. Let's talk about the various geographies. The NCR region has been doing well for you. Bangalore has also been picking up. Going forward, is there a specific region which you are targeting to double down on?
I think while we're present in 6 or 7 cities, the top 4 markets for us are NCR, Mumbai, Pune, and Bangalore. And we don't look at them in any specific order. I think they all have huge opportunities. They're all fundamentally very large and attractive markets. We have a strong presence with a large number of projects in each of these. So I think it comes down to the speed of new project additions, new project launches, the way we're able to execute there. For the current financial year, I think we expect NCR to be the strongest market, both because our own portfolio of launches there is quite exciting, but also because the market there is probably the strongest of any market in the country, though all markets are performing well. Bangalore has also been very strong performing market over the past few quarters. So we expect that to continue to do well. Our 2 major markets in Maharashtra, which are Mumbai and Pune, we also have quite an exciting project pipeline in. I think currently the strength of those markets is very good, but perhaps not to the same extent that we're seeing places like NCR and Bangalore. But our expectation is that all 4 of these markets should do very well over these next few quarters and years. And we certainly are geared towards ensuring our own launch pipeline is robust in each of these. Last year, from a business development perspective, that's in FY23, against total sales of about 12,000 crore, we added a future booking value potential of about 32,000 crore. And I think all of those additions have started to now come into launches. This project we launched in Noida last quarter or Kurukshetra last quarter are examples. We have many more such launches slated for the third and fourth quarter. So hope to see a very robust bookings number for the year.
Company to sustain a quarterly run rate of about 5,000 crore, beg your pardon, of bookings ahead?
Well, look, I think the opportunity clearly that we're seeing in the Indian real estate sector today is a very robust one, both from the perspective of the sector itself. After a multi-year downturn between 2012 and 2020, the sector itself has started performing very well. But even more importantly, within the sector, there is a huge opportunity for leading players to consolidate market share, because whether us or other leading developers, no one's market share today is more than low to mid single digits in the residential real estate sector. And given the kind of advantages that the stronger players have in terms of access to customers, access to capital, we see a big opportunity for market share gains. So certainly the goal will be to continue on a rapid growth trajectory. If you look at our quarterly sales in Q2, they were actually equal to our annual sales from about 3 or 4 years ago. And certainly the expectation will be not only to sustain this on an ongoing basis, but do our best to continue to grow from this high base.
Your net debt has risen sequentially this quarter, almost 6,200 crore now. Are you comfortable with these debt levels, and also with the kind of business development which you have undertaken, is the debt likely to rise from here on?
Well, I think we're very comfortable with where the balance sheet is currently. Our net gearing guidance to the market is that we'd like to operate anywhere between a range of 0.5:1 to 1:1. And I think there will be, of course, movement within that, and there may in the short term be movement outside of that, both on the lower side and the upper side. For many quarters, we had a gearing ratio below 0.5:1, which is lower than we'd like, because we were in the mode of getting all the new projects that we've added, invested, and funded. We now feel that we've done the kind of big push on business development that was needed. We've set ourselves up well, we think, for several years of robust growth, basis the pipeline of projects already in our portfolio. We'll certainly continue to do targeted business development to plug gaps in our portfolio and to replace inventory that we're selling. But we don't feel that the big priority for the company today is business development. It's much more getting the projects that we've already added to the stage of launch, and that will be the big focus. Over the next couple of quarters, we may see debt levels inch up a little bit further. Some of these projects are funded and brought to launch, but over say next financial year, we expect to see operating cash flows grow very sharply and more than cover the requirements for business development.
Okay, and Pirojsha, before I let you go, I want to know about your hospitality foray. We've all seen those, beautiful pictures of your latest property, Taj the Trees in Vikhroli. How's the entire hospitality foray turned out for you?
Well, it's very early days. We're very happy to have launched Taj the Trees here in Vikhroli in October of this year. Very happy with the kind of quality of product that we've developed. We're very happy to have partnered the Taj, who will manage the property on our behalf. But I think it's way too early to comment on the success of the venture overall. Our goals with this development were twofold. One, of course, is the value of the asset itself, of the hotel. But we also think having a high quality luxury hotel like Taj in Vikhroli will help with the overall positioning of our larger set of projects here, both residential, commercial, and other asset classes. So we're very happy with it also from that perspective. With that in mind, I think we will be quite selective in the destinations we choose to do hotels in. While we may do additional hotels, it's really not for us a big priority to ramp up in a rapid manner, and will also be looked at both at the individual asset level as well as perhaps contributing value to a larger mixed-use master plan that we may have in various geographies.
All right, Pirojsha, we'll let you go on that one. Thanks a lot for joining us, and good luck going forward on your business momentum.